Dr. Ayanda Ntsaluba, thank you very much for talking to us. I appreciate that you have made time to talk to us and explain what the working groups that report to you have been working on, the financial services, the trade and investment groups. What are the key things coming out of that?
Well, Tim, let me start with the trade and investment, because in a sense that's perhaps the major area that we're trying to deal with. I think during our chairship of BRICS, we've really tried to make sure that this working group is established. And the reason we wanted it established is to draw attention to the fact that even though we are doing well with some of the BRICS countries in terms of the increase in the volumes of trade, but the trade is skewed. It's not balanced. We are still exporting to them largely, and there's less of them importing from us. And more importantly is that we still continue the traditional thing of exporting raw materials, and we're importing finished goods. And in a sense, we're using essentially the call for us to try and have far much more balanced trade within the BRICS family, because there's no point in making noise about these things in the multilateral fora, where even in tighter structures like the BRICS, where we're more like a family, we actually cannot confront those issues. So that working group is largely working on that, and that is why, and we're working very closely with the DTIC, and that is why there were the buying missions, the delegation that came from China, because the Chinese particularly, because the volume of trade has increased far much more significantly with China and India, less so with Brazil and less so with Russia. And so we are targeting India and China particularly for that, obviously using the BRICS platform. So that's the main focus of that particular one. Now with the financial services, a number of things that we're doing. The first part is that we had a session on Saturday on the reinsurance, trying to build in to see if our BRICS countries can in a sense partner with reinsurers in the continent, especially in the context of the African Continental Free Trade Area, so that in a sense there's some sort of risk mitigation strategy, and therefore enable investors to come with reinsurance capabilities that are well developed in the continent. So that was one part. This morning we're having a major discussion, the breakfast session, with what is called the BRICS Bank, the New Development Bank. And there the focus really was trying to understand exactly the progress thus far in terms of investment in infrastructure. Secondly, looking at the focus area they've identified, which is far much more the green economy, renewable energies, basically exchanging ideas as to exactly how they intend doing that. That was the second part. The third part, as you know, the New Development Bank has started a very important initiative where, when they deal with the members of the countries that they lend to, they don't only deal in dollar-denominated loans, they are also using local currency. And they were explaining to us, and particularly Leslie Master spent a lot of time outlining exactly the strategy, the rationale behind that, and what are the benefits that they already can see that member states are getting. So that was also one other important discussion. And of course, the last part of the discussion, engagement with the BRICS Bank. Up to now, a lot of their loans are to sovereigns, to countries. Then they moved on to the next phase, where they are funding more or less SOEs. For example, they're funding, I think there's a major deal they're working on with Transnet as an example. They funded ESCOM. And the key question was, when are they making now the transition to funding pure private sector? And they were really explaining also the risk involved, and how they are trying to unfold that strategy without at the same time undermining the credit rating of the new deal. So those are the areas that really we've been focusing on.
Well, I think it's a good thing from the point of view of so many people, that the trade between South Africa and China has grown substantially, as you say, but there are concerns about the deficit in the case of South Africa. Yet South Africa exports a lot of commodities into that market. There's demand from China for the commodities. But the talk about beneficiation in South Africa has been going on for a long time. Why is it not happening? That's one of the things that baffle me. That, it's like there's nothing new here.
Yeah.
We've spoken about.
I mean,
this before.
that's true. All of us would concede that point, and that is why, as we speak, one of the major sessions for today is the manufacturing session, and part of it, and that is why Minister Patel himself, actually DTIC, has been very keen on us having that, and it's far much more to give momentum to that.
Yeah.
How do we really? What are the obstacles that perhaps BRICS countries see that they would like to put on the table that we need to attend to in order to attract investment from them? Yeah. Because, as you correctly point out, there's no point crying about that we are importing finished goods and exporting raw materials when, in fact, we're not manufacturing.
Let me tell you this, Dr. Ntsaluba. It's actually from one of the Indian companies operating in South Africa. They pledged or committed to invest 11 billion rands in South Africa to produce some finished product, but they're not able to because of problems with energy in South Africa. They're not able to build their smelter. So I'm raising this as an example of so many moving parts on the part of South Africa that need to be sorted out in order to mitigate or improve the situation regarding the deficit of trade.
Absolutely. I mean, Tim, there's no question. I mean, in a sense, I think there are three baskets of things here. The first one is how do we develop our manufacturing capacity? That's the one. Secondly, even in the things where we are producing things that we believe can be exported to these markets, the exposure of some of our producers, which is what the buying missions were all about. For example, in agriculture, we are arguing that there's a lot of displacement that BRICS countries can make in terms of focusing some of those imports, citrus products, if you look at our wines, and many things like those into South Africa. Then, of course, I think there's no denying the fact that the energy situation in the country, which is why I think it's something to be attended to very urgently, is compounding our problem. So you've got a manufacturing capability that is we still need to develop further. Now, whilst you're still trying to solve that problem, you now suddenly have an energy problem, and knowing that manufacturing, by and large, people are not going to put their money and invest in that unless they secure energy, because otherwise their plants are going to lie there idle.
There's an additional problem, as much as now this is a South African problem more than BRICS, I think. But you are definitely focused on it. I can assume the logistics part.
The logistics, yeah. I mean, in a sense, I mean, even on the exports, I mean, we see these stories all the time, and of course it's not stories because I sit also in the business leadership South Africa and BUSA structure, so I know that we've not made use of the commodity boom when in fact South Africa could have benefited significantly, not because of now we're not able to mine things out, but we're just not able to get things to the port. So I think we're at a critical stage where really, for us, we really need to step back and look, because we've got enormous opportunities. I think that should be the starting. We've got enormous opportunities. But I think we score own goals in so many areas. I mean, the energy one is a bit of an own goal, we know. The problems with Transnet is a bit of an own goal. And thankfully, I think in all these areas, there's beginning to be momentum that is being gained. And I think key to that has been, I think, a bit of sober-mindedness on the side of our leaders to recognize that there's no point in the people in the private sector pointing fingers at the failures of the state when in fact it's affecting their industry. Rather, and also there's no point in the state pretending that it's got the capacity to solve all the problems, when in fact, if you look at the private and the public sector together, we indeed as a country have got enormous possibility to solve this problem. So some of these initiatives, whether on the rail side, on the logistics side, and on the energy side that we're talking about, I think the existence of these two major working groups between business and government, I think to me are a reflection of the fact that we really do recognize these are major constraints to our further development.
In a broad trade sense for South African businesses, where do you see opportunities emerge and the sectors that are likely to benefit from the deliberations here at the BRICS Business Council Summit?
I mean, I still think we've got still a lot of scope on the automobile side, and I think that is why there's been a lot of exposure on people on that side. Not so much in terms of us exporting, but also to begin to look at some of the emerging giants in the East, in China, in India, their capacity now to manufacture cars, and looking at South Africa as a base. So that's it. I think on the probably the other area that we want, obviously, is a precursor to looking at areas of investment is on the skills development side. I think producing the skills that are requisite for our economy then becomes also another major challenge. But I would argue that let's focus more again on agriculture. I think it's still a major competitive advantage that we have and capacity that we have, which I think, I mean, we've spoken about the issue of beneficiation, but that's a slightly different issue. But to me, I actually think agriculture is still one of those areas that both as South Africa, but also using South African capabilities and partners with BRICS to exploit the great African opportunity. I think those are the areas that we need to look at.
On the part of the financial services, that you mentioned the presentation by the new development bank, the BRICS Bank, as it were, there's the global debate or issue that's emerged, that of the de-dollarization. In fact, prior to us reaching this point, it was positioned as the main thing that's going to be discussed at the South Africa BRICS Summit. But I haven't had anybody talk much about it. How are you engaging on this so-called de-dollarization?
Well, I mean, I think as I was indicating, I think the approach that the BRICS Bank is taking is that there's no doubt there is a trend that's growing globally around less dependence on the dollar and probably beginning to forge alternatives. So that is there. The issue is what is going to be the pace. And the sense that I'm getting from the new development bank is that the strategic approach that it is taking is far much more to say, instead of focusing on de-dollarization, let's recognize that for now, a number of the countries do trade with major Western powers where the dollar is strong. But let's begin to open up an easier channel also about use of local currencies. Because the issue of creating another global counter to the dollar is something that needs to be thought through far much more carefully. But I think the important thing is about how do we create less dependence. And I think the issue about opening up facilities and loan facilities in local currencies is part of the strategy to deal with that.
Dr. Ayanda Ntsaluba, pleasure to talk to you, and thanks for opening our eyes to what's going on at these deliberations here.
Thank you very much, Tim.
I appreciate
Thank you.
it. Thank you.